Good afternoon, tech traders. I want to talk to you today about what's happening in the marketplace. Today is the 20th of March, 2023, and the market is still reeling a little bit from these all the happenings in the financial world. Mostly started off with Silicon Valley Bank and the contagion spread to some of the other banks, Signature Bank, and most recently now is FRC. You can see this is just a look at my live watch list, and usually what I do is just sort here what's happening in the marketplace. And this bank right here is down 45% today. So this one is in the financial sector is really under the gun. I don't know that this is tradable when something is in such a free fall like this. I don't generally tend to stay away from it until the excess noise is taken out of it. I don't know that much is tradable there. And even if something was, the bid-ask spreads are going to be so wide that the only people that are going to make money off of that are the market makers. So I tend to avoid that. But when I'm looking at the stuff that is down today, I tend to look at things that are down over a couple percentage points, maybe 1 or 2 percentage points, and see what's down. See if there's any consistency to what is down today. You can see the financials are popping up. A couple of information technology shares are popping up as being under stress today. And one of them that I noticed was INTC. It's traded 25 million shares, and it is down 1.8% today. We're still 38 days away from an earnings announcement. But Intel, I'd like to see what's going on with Intel. So looking at Intel, you can see that I've actively traded Intel. I am a shareholder of Intel. And you can see this dotted line here is my cost basis. You can see I am underwater with Intel. So I own it at a significantly higher value than what it is right now. So from an equity standpoint, I am definitely not made any money on Intel under a lot of pressure. That does not mean, however, that I haven't traded it very well. I have traded it very well in terms of selling around that volatility. You can see I've got one trade in here in the last year that has lost me $72 on one trade, but all the other trades I've been able to capture good amount of premium, and even most recently with a short put that I had out in the April contracts, made $100 on that. So but continue to trade around Intel. I am still I'd like to say I'm a buyer of Intel. I'm not going to back up the truck yet for Intel, and given the fact that I do own a decent amount of shares already. But I have identified what I believe is a pretty strong buy zone, which is right around here. This is around the 24-25 level, where I believe that this thing can catch a bid. Again, I talk about it sometimes as being a little bit of a support line. I'm not a big support and resistance person, but if you look at the this area has definitely been supporting the price. It's gone down and it's touched it once or twice and bounced right back off of it. So it looks like that could be an institutional buy zone. Now, there's no question, Intel is in the penalty box, folks. They just cut their dividend. And I don't know that they're coming out of this. I don't expect some huge reversal in terms of Intel anytime soon. They could be in the penalty box for some period of time. But neither am I hitting the panic button and selling all my shares in Intel. I don't see the need to do that. I think over the long term, I think Intel is still going to be a very viable company to own. But it has been under a lot of pressure lately. But I got to believe that down here, the valuation down here is got to be starting to look attractive anyway. So anyways, I come back to Devos and take a look at the data with Intel. I've already populated it here into our software package. First thing you notice is the term structure, the VIX term structure, starting to look a little bit like it's flipping back into contango, and meaning that it's actually a little bit bullish out there. Now, it's all over the place in terms of the 9-day VIX, the 3-month VIX, the 6-month VIX, and the 1-year VIX. You can see the 6-month is elevated over the 1 year. The 9-day is elevated over the 3 months. So it's kind of all over the place. But in general, I'm going to put it into a very, very mild contango spot today that might be somewhat bullish. The software package is still showing backwardation because of these longer term, the 3-month being below the 9-day and the 1 year being below the 6-month. That's going to show backwardation, but overall term structure might be a little bit flat to contango. We still have some fear out there. The VVIX is elevated over 110, and the skew is elevated over 125. So those are both flashing red to me, saying that there's a little bit, still some fear out in the marketplace. The interesting part is we actually have Intel trading over its 50-day moving average, still below its 200-day moving average, but it's sort of all jumbled up down here after a long, drawn-out period of coming down. I don't know that I'm going to get very directional with a trade on Intel. In fact, if I do anything on Intel, I wouldn't mind being a couple of short deltas, meaning I still think that this, that Intel might have some near-term pain. The thing that is interesting that I believe that we could find a trade in here is take a look at the front month implied volatility relative to the historic vol. Somewhere, this is a phenomenon that we trade, somewhere in the difference between there, I got to believe that there's a little bit of variance premium, there's a little bit of excess fear in the marketplace that we might be able to take advantage of, if we're smart. So that's what I'm going to look to trade. I'm going to be looking for a short Vega position. I wouldn't mind a little bit of short delta in there. And the reason I like that, the fairly neutral trade is, at least historically, the CV, the coefficient of variation on this thing is quite low. In other words, it's been pretty dependable. It's been pretty dependable not to make big, stupid moves outside of its expected range. And you can see that in the chart. It really hasn't made a lot of big, stupid moves. And it's got somewhat of this support down here around $25. So that, to me, is says that there could be a trade out there. So let's see what we can build in the trade builder here and see if we can find something that makes sense. So I'm going to start off with just a naked short put around that 24-25 level. So I'm going to short one put down here. What is that telling me? Right off the bat, that tells me there's a little bit of expected value in here. I do plan on being out of the trade a couple of weeks ahead of the May contracts here, which I've got up here as May 5th. And if I just look at a naked short put of the 24, that's not a bad trade. The thing I'm coming up short with here is the payout ratio. I'm risking 220 to make 42, and with this percentage probability of profit, it's not getting me the payout that I really want to make this trade. So I'm going to see if I can improve that a little bit, and I'm going to go and I'm going to ladder it a little bit more. I would definitely be a buyer at $24 a share. I think that's below that buy zone that I indicated. I would definitely be a buyer at $23 a share. So I'm going to ladder in, or I'm just going to add in a short put on the 23. And now you can see I've now starting to flash a little bit more green. I've got an 83% probability of profit, and I'm risking 372 to make 73. That's about getting me to a proper payout for making that trade. $73 of income for this trade, 6.8% return on risk, and it looks like it's sized appropriately. The thing that jumps out at me now is when you look at the Greek sensitivity profile, it is still a positive delta trade. That's that bar up there shows 22.93 positive deltas. And I mentioned I really don't feel too positive about Intel right now. In fact, the ratio of my delta to theta, which I usually like to keep around 5 or below, is up here around 12.6. So I think relative to what I'm getting paid, which is my theta, I think I'm taking too much directional risk. So I'm going to look to offset that with perhaps a short delta position up on the call side. So I'm going to look at doing a short call spread here, which is I'm going to sell one of the 30 strikes, and I'm going to hedge it with the 35. And I'm going to make what will ultimately wind up being a bit of a broken wing condor here, where I'm taking $500 of risk on the upside of this thing. And that is that you can see is adding coming up. It's lowering my probability of profit significantly to 63%. But it is giving me a very good payout ratio. If I am now, the deltas have gone from positive to a negative 11. It is now a short delta trade, and my ratios are back in line of where I like to see them, with a vega theta below 3 and a delta theta below 5. I'm now in the range where that looks pretty good. If this thing were to continue a positive move, however, I'm going to see if I can maybe push this out a little bit further, see if I can get a little bit better probability of profit than 63%. So I'm going to push that 30 to a 32, and that doesn't help me much. As you can see, I've now missing my payout ratios here. See if I push it a little higher to a 33. Again, getting even worse in terms of my payout ratio. Let's see if I can get this from a 31. 31 is a little bit better. I was able to improve the probability of profit a little bit. I've got my payout ratio here that looks pretty good, looks sized pretty well, and I'm looking at about $164 of income. My ratios here look very good, hitting the targets, not a very highly delta position. It's very short, just a couple of deltas here at negative 3.57. Seems to be the gamma is driving this trade. It is short vega, so I'd be looking for a contraction in some of that volatility. But it looks to be a well-balanced trade. So I like these short positions down here. It's sized well. The ratios look good, and I've got a positive expectancy. I'm not going to play this one too big, but I do like the balance of this trade. Taking now about $400 of risk up here at the top, and taking about $4,000 of risk down here with the two short puts, and that's giving me a pretty good return on risk, and halfway decent return on capital, maybe a little bit light. So if I wanted to keep active in Intel, continue to generate some income, this looks like a pretty good trade. So I am going to be short the 24 put, short the 23 put, and I'm going to be short the 31.35 call spread in the May contracts. The plan is to be in the trade as long as 46 days. I'm pretty sure I'll be out of it well ahead of that time. And yeah, pretty good expected value with pretty good payout ratios. So hopefully that will turn out for us. Any questions, I'd be happy to answer them in the Discord channel. Hope you found this trade helpful, and best of luck with your own trading today.